Why Bitcoin dominance is rising and the alt season your Hopium dealer told you about hasn't materialized yet. Hey guys, it's Keith Allen. Having some issues with button pushing today, but not on my trades, but just on this live stream. But I think I got that sorted out now, and we can get into it. Hope you're navigating this well. The noise and the speculation on social media is just like it's ridiculous. I mean, I don't, to be honest with you, if I wasn't utilizing this platform to communicate with you guys, I don't know if I would spend any time on it. There's people are all over the place. And they're all pumping their own narratives, and then when they're wrong, they just kind of delete their posts, and you know that's not how I roll. And I'm also not. And if you followed me for a while, you know I'm not an "I told you so" guy. So I'm not going to say "I told you so" here, but I am going to show you some of the calls that we've been making here for the past, since before the beginning of the month, before the beginning of the quarter, for that matter, and things are playing out exactly as we forecasted. And so I'm going to show you why that's working, show you what I'm looking at. I'm going to talk about this alt season narrative that just won't die, and show you where those critical resistance and support levels are. They're going to tell us how things will develop from here. If you're new to the stream, welcome. Again, my name is Keith Allen. I am a full-time trader. I'm a work-from-home dad. I am co-founder of Material Indicators. And if you're an OG, thanks for coming back, man. I really appreciate each and every one of you guys. Want to remind you, live chat is open. You got questions, I'll do my best to answer. If you have insights, by all means, please share them. Enrique, LFG. Good to have you here, man. Appreciate you. So just a quick bit of housekeeping before we start. You know the deal, right? I do this for free. All I want in return is your engagement. Smash some buttons for me. Hit that like. Hit the share. Bring some of your friends. You got a fellow trader. You got a buddy who trades. You got a relative, your brother, your dad, your aunt, your uncle, your buddies from school. Bring them in. If you're in a trading community on Telegram or Discord or wherever, share it. Bring them in. Help me grow the channel. Really appreciate that. And then the last thing you need to do, make sure you hit that subscribe button so you don't miss any of the future streams, not just because I want to spend time with you, but because I don't want you to miss out on any of the information I'm sharing with you, because I don't want you to make the same mistakes I made when I first started trading. I want to spare you that pain and those losses and hopefully help you trade smarter. All right, let's do it. LFG, as Enrique says. Let's put that one back up again. LFG, we're doing it. And we're going to start here on one of my favorite charts that I created for you guys. And this one shows Bitcoin dominance. It shows total 3ES. It shows ETH dominance, and it shows stablecoin dominance. And that is important because it really shows us where the money is flowing. And so, yes, it gives us insight on whether or not we might be getting close to an alt rally or not. Notice I don't use the word alt season, but to an alt rally. And I don't use the word alt season, or words alt season, I should say, because quite frankly, I just don't think that we're going to ever see another alt season. And I don't use words like never, ever often, if at all here, because never tends to not age well in this game of crypto. But I will say this, the dynamic of this market has changed in such a manner that I really do not believe that we're going to see an alt season in the same form that we have seen in prior cycles, like we saw in 2021 and 2017. I just don't think it's happening. And the reason why is there's so much institutional interest and so much institutional money hanging on to Bitcoin and elevating that Bitcoin dominance, which you see is now back at 59 and change, headed back to that 60 level. I mean, we were up here around 66% back in June, and we had these glimmers of hope that we would see this alt season happen, and it just has not. And so here's the deal. We had marked at our last real hope and dream of an alt season. We had marked a local top, and alts total 3ES, for anybody that doesn't know, is the top 100 coins by market cap, excluding Bitcoin, excluding ETH, and excluding stable coins. So this is truly a basket of the top altcoins by market cap. And breaking that local top, there were glimmers of hope or hopium that we would see a rally here, right? But those quickly reverted. And if price consolidates, or I guess total 3 market cap consolidates around this range, it could mean that we're coiled up, or that alts are coiling up to at least rally out of here. And that doesn't mean that every alt is going to rally. That doesn't mean you should go spray at every shit coin that you can find, because that's not how it works anymore. Find the quality ones and the ones with communities. But be careful, because I truly think at this stage that a lot of these alts, especially the small market cap ones, especially the ones that don't really have any fundamentals or use cases, and their pump and dump schemes and memes, I really think that those are modern day exit liquidity. So if you're in them, pick your targets and don't be greedy. Take the money and run when the opportunity comes. Okay, that's how I play it. You do you. Nothing, of course, I say is advice. So you do you. Hey, Duncan, good to have you, man. So this is obviously, we see that Bitcoin dominance is on the rise. We see that total 3, that's the altcoins, have started to decline again. ETH is declining again. And there's been so much hype about ETH, like how come ETH hasn't hit 5K yet? Well, probably because it got overhyped, right? So Tom Lee from Fundstrat, a guy that I respect. I think he's made some fantastic calls, and he's a lot more vocal these days, and it comes across with a lot more conviction these days now that he's taken on this role, and is leading the charge on ETH treasuries. They have accumulated billions. I think about 2.5%, over 2.5% of all ETH is held by the organization that Tom Lee is leading. And they're on their way. I think their target is 5% of all ETH. And it's not just a buy and hold strategy in the manner that Michael Saylor is accumulating and holding on to Bitcoin. Bitcoin, obviously, a store of value play for him, and a leverage play for him. With ETH, it's a bit different. With ETH, there's obviously the staking component, which means there's income coming out of this along the way. And with ETH, it is perceived that ETH will be really the future, the backbone, if you will, the skeleton, the framework that the new financial system is being built on. And that's not speculative. That is actually happening with banks right now as we speak. Now, might banks eventually go, build their own proprietary blockchains and not necessarily build off of ETH? Entirely possible, but right now there is a race to get in it, and so it is perceived that things are going to be built on ETH for the most part at this stage. And we'll see where things go from there. But certainly, I think, at least I'm playing it as a safe bet that ETH is going to grow, and that 49.50 is not where ETH is going to top for the cycle. I think ETH will go beyond 5K and well beyond 5K over time. I'm not personally playing ETH as a short-term trade. I'm now in it as a position which I'm building. I did actually move up a trailing stop loss and close out of a small bit of ETH today in profit, mind you, not big profit, but in profit, so that I can buy back cheaper. And why do I think that I'll have a chance to buy back cheaper? Well, let me show you why I think I'll have a chance to buy back cheaper. I have been sharing with you guys for quite some time a chart with an indicator on it that we call timescapes. And I'm sharing this a lot these days, not to come out here and be a stone cold chiller, but to show you how consistently this works and to help you make money, or at the very least, stop losing money. This was very, very clear. And I told you, same thing for Bitcoin, and we'll get into the Bitcoin chart, but since the natural flow of our conversation took me to ETH, that's where I'll start. It was evident, right? So I was telling you back in late September that we were going to have a Q4 timescape level appear at the quarterly open, which of course we did. And that occurred right here on October 1st at precisely $4,146 on this particular exchange. Might be a few dollars different on the exchange you're on, but you get the point. This level was set at the open. Now, unlike other indicators on TradingView, for example, trend precognition, which need a full candle to validate and print, this is printed the instant that we hit that open, and it will not repaint ever, never, ever. Okay, so this is there, and we knew this would be the baseline. And so I'm going to take it back to the daily time frame to make it easier to see what's happening here. So what I had said at the time, and have consistently said before that and ever since, is that I expected, we would get clarity on the trend after that open and after the first weekly open of this same time frame, meaning the quarterly time frame. So here was the open of the quarter, and here was the first weekly open. And historically, what has happened, and this has happened with 100% consistency since the beginning of Bitcoin's time, when an asset opens above and proceeds above that quarterly timescape level, it tends to revert after the first weekly open of that period. And likewise, if price declines at the quarterly open, it tends to revert back up after the first weekly open. So we saw a beautiful open after a little bit of consolidation, and I actually felt pretty good about this consolidation here, right? Because there were 1, 2, 3, 4 candles at play here. Actually, we could go back even further and find more confluence in this range. This felt like a good solid RS flip to me. And of course, came back where this is obviously a micro trend line, but above the trend, we saw price pumping up, got to a new all-time high. Excuse me, not a new all-time high. That was Bitcoin that got to the all-time high, but made a new local high, then another local top, and price reverted. And so this was a bit of a fake out here off of the first weekly open right here. This was the quarterly open. This was the first week of the quarter. And we had a 1-day pump, kind of a fake out. Trend precognition said, that's probably going to be it. And it was a full retrace on that candle. And with a 5% drop, we fell below the trend line. Tried to recover it yesterday with a fake out. Tried to recover it again today with a fake out. And now we see a rejection that has taken us. This is now a second rejection from the timescape level, and fighting to reclaim support here at the 21-day moving average. I don't mind a bit of an overshoot of the 21-day as long as price can recover. And if it does, then tomorrow's candle needs to not wick below it. As long as we keep wicking below it, that's weakness, in my opinion. So there is a chance at recovery, but I think there's at this stage an even greater chance that even if we do see a recovery, if we don't start closing above this 10.6 timescape level, then we're going to go back and retest support down here at the quarterly open, which is at 41.46. Similarly, on Bitcoin, let's look at that chart. Just about the same thing happening here, only it looked like Bitcoin was holding this trend line better not too long ago when I posted something in our community that made me think that it might hold based on what I was seeing in fire charts. But some of that liquidity has moved. It looks like. Let's get a refresh on this and see if we can gain a little bit more insight here. Whales have been playing the game a little bit today, looks like. Let's brighten this up so we can see. So you can see, I thought this was going to hold, and then it looked like we had a block of bids shift downward, and that opened the door for more downside. Whales dumped into it. Purple whales dumped into it anyways. Now, a bit of buying resuming here, but I'm not convinced that this is going to be enough unless we see more move into place, which has me then focused on a support test. You can see a little bit of bid liquidity laddering in here. And we have a deeper concentration at 115K, but that's only 10 million, a little more than 10 million. So not a lot of confidence in that holding. And you can see even more, we're up to about 18 million at that 110K level. So if things were to play out in a textbook fashion, then I would say if we don't reclaim this level here today, and same set of circumstances, even if we do reclaim this level, if we don't see Bitcoin reclaiming this 10.6 timescape level at 123.5K, then I think it is likely that we test support down in this range. It could be anywhere between the 21-day moving average at 116 and change, and potentially the quarterly open, which I think would be poetic. It would be, if it went all the way down here, that is a full retrace of the move since the quarterly open, but it's a support test that I would value. So I don't love losing the trend line. That's certainly not something that I think is great or a sign of strength because it's not. But overshoots like this are common, and it's not. And this has been my theme for the month. It's not where you start; it's where you finish. So I don't overreact to a daily candle wicking below the trend line, or even a couple of candles below the trend line. I want to see what happens on the weekly, right? Does the weekly close above this level, or does the weekly hang back down in this range? And will this be the one that holds? So nothing set in stone says that this timescape level has to hold if we go and test it. However, I would say that these three moving averages here, all compressed in this range, add strength to this level, and especially where we have the closest confluence between that red 50-day moving average and this quarterly timescape level, which is just above 114K. So you saw we did have some bid liquidity up at 115. So maybe we don't get all the way down here. Wasn't a lot, so maybe we do. Bottom line is you just have to watch and see how candles develop and see how we react around these levels. At the moment, holding above 120K. We did wick down briefly to 119.7K, but it looks like let's see if buying has resumed yet on the daily. And it looks like more bids coming into this range, which is a good thing. I got to refresh this. My internet connection has not been kind to me this week. So, a little pressed on time today, but if you have anything you want me to look at, I'll be happy to search up a couple of coins and see how they're looking in the charts relative to all of these other things that we're talking about. And in terms of alts, you know, even if there's not going to be an alt season, there's great trades to be had, no question about that. So look for those setups and look for those opportunities. I would just say don't go chasing them, and if you use the timescape levels, you will have a better understanding of where that critical resistance and support lives right now, and you will mitigate a great deal of risk. So you can see the bid liquidity is trying to come back in, and there's some incremental buying down here from purple whales and also yellow. May or may not be retail at this point. It's not a huge amount of volume, but a lot of times we'll see the whale classes utilize those smaller classes to TWAP their way out of stuff like this. So the fact that this is a bit of a smoother trajectory out of that yellow class right now, and again, it's not a lot of volume so far, so I would look to see over time if this turns into significant volume. That will give us a clue of whether that is indeed retail or if there's a institutional entity perhaps TWAPing some buying. So that's pretty much the long and short of what I'm looking at here. And I would again caution you to stop like paying attention to the hype, the up only hype, the Uptober hype, the God knows whatever hype, the this is the end because the cycle has typically ended on October 18th or some shit like that. Listen, things have there are a lot of forces that are influencing this market. Remarkably, there has not been much of a reaction to a government shutdown yet. Mostly, I think, because Americans understand that this is typically a, political theater, political chess, if you will, and Trump has no interest in. He's dealing from a position of strength right now. And number two, there are a couple of, now if it extends and if it goes on for weeks, if it goes on beyond this month, it may not be so pretty. But aside from that, we have a couple of things in play here. It looks like they are moving forward on a peace deal in Gaza, which would be fundamentally bullish, just worldwide, globally. That's one. Number two, we have a Fed rate cut coming here later this month, and sentiment is strong that will happen. Whether it'll be a quarter point or 50 basis points remains to be seen. But safe bet that that's going to happen. And we're kind of navigating a bit blindly because of the government shutdown. We don't have the data from BLS, the Bureau of Labor and Statistics, that would give us the data on employment and inflation, et cetera, that we would normally be monitoring right now. So we're flying a bit blind. I would think that the Fed has access to data that they don't need to, they don't need the reporting to come out of BLS the way that the rest of us get it. But who knows what's happening there. But those are fundamentally bullish things in terms of cash coming into the market. I've seen a lot of talk of, oh gosh, retail hasn't really awakened yet. Who do you think is buying ETFs? ETFs are hitting record numbers. I can assure you that's where retail lives. Retail is moving into ETFs. especially the boomers and some of the Gen Xers that may not be comfortable um, on crypto exchanges or may not completely understand crypto exchanges, and also especially since recent legislation has outlined a in kind opportunity for ETF owners to redeem their ETFs for the underlying asset. So if you can do that, then you eliminate a lot of the risk, namely the counterparty risk, and and you can actually have some tax advantage by doing that. Now, I'm not a tax expert, so don't take the tax advice from me or any advice for that matter, other than stop buying into the hype and start using data to make decisions. Okay. So if this continues here, it looks like this could be, just another shakeout opportunity. And yes, there has been some profit taking along the way here, right? So it is. We have seen some whale selling, and that's notable. But you have to look and see what's the real impact of that. What's the volume of that? And the reality is, um, whales, especially mega whales here, if we look over the last month, right? And there's been some good opportunity here to make money, as you can see, right? Price has moved up from 109 up to a new all-time high in 126, 127 range. And now we're seeing a pullback. Profit taking is normal. Now, how much profit have they taken? Well, as you can see here, it's less. This is the normalized view, right? It's a scale of one. If you visualize this as a scale of 0 to 100%, they have sold. Brown has sold. Let's see, a total. So they bottomed out at 15% of what they had bought in over the last month, and now they've bought back in 5% of that. So it's net 10% down. They've taken profits. They took profits on 15% of their position, and are buying back in. So you decide what you're going to do. Are you going to sit on your hands, uh, not realize any gains, or take any profits along the way, and risk potentially giving it all back? Are you going to hold on to your position? Are you in one of those never sell guys? You're going to hold forever, and that's okay, right? That's fine. Buy and hold is outperforming a lot of traders, especially overactive day traders. Right? I would caution you, if you're not using the right tools. Um, that's that's where a lot of people lose money. Now, you can make money using the right tools. For example, our MTF mean reversion indicator, which I actually adjusted. I was running a 1.5% deviation and took it to a 2% deviation because we're seeing increased volatility, and this bottom line would be a 3%. I was looking to see if we get any signals there, but here's what 1% deviation looks like. You see a few more signals than we got on the. This is 1.5% versus 2%, fewer signals, and this is a great way to find those entries that have a high probability of bouncing. So you can use this to scalp quickly, or you can use this to dollar cost average and build a longer term position. Great tool. It has made me a lot of money over the years. So you're interested in that or anything else that I've shown you, by all means, you can check them out at materialindicators.com. Links are in the description. Again, appreciate you guys joining me. If you have not done so yet, make sure you hit that subscribe button up above so you don't miss any of the future streams. I hope this has been insightful for you. My goal here is to help look at this, and looks like we're trying to recover this trend line here right now. So the charts don't lie. Bottom line here, right? So let's see. You can see a little bit more buying coming in from purple here now. and yellow coming on a bit stronger as well too. So can this continue? Can this continue to develop? And it very well may, but at the end of the day, we have to watch and see. I say the end of the day, end of every day. We have to see if price can ultimately clear this and sustain above this 10-6 2025 timescape. That's the first weekly open of Q4. Until price can hold above here, we risk more downside. Simple as that. And a support test from here would be foundational, in my opinion, and send us, boom, up onto the next leg up. That's how it looks from my view. Hope this has been insightful for you. Again, at the end of the day, I'm trying to help you trade smarter. Have a great day, my friends. We will be back. If I see anything noteworthy that I think needs your attention, I will do my best to post something on social platforms. In the meantime, if you haven't done so yet, join us on Telegram. We've got a free Telegram community, thousands of traders around the world joining us there. We are talking about this stuff all day, every day. Links are in the description, and links are also on the top of the Material Indicators homepage and the Material Indicators X channel at mi_algos. There you go. That's a mouthful. Have a great day, guys. Talk to you soon.